Today we have a new topic on the financial management. So we do study the topic first, then we continue with the homework assignment, and we'll see the solutions, okay? So the topic on the financial management is accounting for limited companies. So we are looking at the limited companies because this is the mostly form of companies which we can make or see. Like I just want to try to focus on it first. So let's see the account which is running in the limited companies. The topic and structure would be, so nature of the linked companies, identify what is linked companies and how they made up, the main features of owner's claim in a linked company, the statutory and non-statutory rules that surround the accounting for linked companies. So what kind of rules we have for linked companies in terms of accounting. As well, on the profit and loss account and balance sheet of linked companies, what's the difference we have of the financial statements, the limited companies compared to the other or rest of forms of companies, like this. So the key terms you must be able to use here is you would find the linked company, shares, linked liability, directors, public and private companies, the reserves, the nominal value, dividends, equity, reference shares, the capital reserve, the share premium, bonus issue, rights issue, the bench and credit accounting. What is actually a limited company? It's an artificial person that has been created by the law. So this is the company which has been created by the law. So it has separate life to its owners, which means the claims and obligations would be separately from the owner's budget, and it's granted a perpetual existence. That means it would be exist over the years, which is during the always, which means exists always. So have no expiration date for, let's say, expiration date for the limited company. It must take responsibility for its own debts and losses, but its owners are granted limited liability. That means so the company has responsibility, right, behind of its customers, its partners, as well as the government, where they pay taxes and other kind of interest. But the owners, which is made some investment to the company, which we call the shareholders' equity or capital, they actually are granted by the liabilities. So they have some limit from. That means they would be responsible for that amount how they invest to the company. So it's governed by a board of directors. As well, a public company can offer its shares for its sales to the public. That means we have two kinds of limited companies, right? You know that the public company and the private company. So the public company can offer its shares for the sale to the public, which means in the stock exchange, right? Let's say it's in the Bursa, right? And the private companies cannot. It can issue the shares and sell to the existing shareholders, among the existing shareholders. So the share capital, right now we're talking about how the limited company is being financed, right? The share capital of the company can be of two types. We have, so the company can issue two kinds of shares, which is ordinary shares and preference shares. I think you have a topic on the accounting skills where we talk about the shares, we'll talk about the type of shares and their differences, right? So ordinary shares, they are main risk takers, and they have given the voting rights. So company which is issued the ordinary shares for the for the shareholders, for the investors. Those investors can have a voting right in the decision making of the business, right? And the preference shares are given a right to fixed dividend before ordinary shareholders receive a dividend. So the companies which issued the preference shares, they give a fixed dividend rate. So, and they have to pay these fixed dividends yearly for the shareholders. And they are also paid before the ordinary shareholders receive their dividends. Firstly, which means they are more, let's say, they got common as firstly getting the earnings from the company. So I think you remember this topic and the account skills. So as well, the limited company can be financed by the reserves and loan capital. So three types we have of the financing into the limited companies. The three kind of sources which is financed by the limited company. The first is capital, which is shareholders' equity right, we call it, when the company issue the shares. Second is the reserves, here it comes, and the loan capital. So what is the reserves? Reserves are profits and gains made by the company and form part of the ordinary shareholder claim. So this is the main profits that the company have at the end of the year, for example, where they have got some earnings, and this is a part of the earnings. And loan capital, this is provide another source of finance. The loan capital, for example, this is capital, which is, for example, owned from the financial institutions like a bank, or the loan from the partners as well can be. So let's see in the detail of each of the source of financing linked company. First of all, it was shareholders' equity, right? You remember when the company issued the shares, two types of ordinary and preference. That we have a topic on the accounting skills where we have studying details of the shares. Let's see the reserves. So reserves, we have two types of reserves, which is called the first one, revenue reserves, and second, capital reserves. So here is the revenue reserves. They arise from trading profit and from realized profits on the sale of fixed assets. What that means? So the revenue reserves, they arise from the income, the company's income, which is the basic operation of the business, right? Which is sales, for example, and as well from the profit, which is we got from the sales of the fixed assets. For example, when the company sell its fixed assets, it will get some earnings, right? Some profits. So this is profits comes under the revenue reserves. As well, we have a capital reserves. These reserves arise from the issue of shares above the nominal value or from the upward revaluation of fixed assets. So this is, let's say, capital reserves. This is when the company issued the additional shares, and whereas the price would be higher than the first of shares values. So here is. So I have given already examples when I have explained each of them, which is revenue reserves. When you will get, for example, the revenue reserve, this is the part of the profit of the main operation of the company, the sales, where the company receives the revenue. So the part of the revenue, which is would be as a net income, will be reflected in the revenue reserves. And as well, when the company sells its fixed assets, so this is the profit from the sales as well comes in under the revenue reserves. And the capital reserve, this is when company just issued the additional shares, and price would be fixed and would be higher than the nominal value of the shares, which is issued the first time. Okay. So next one. So what kind of share issues can be? So here is we have as well two types of shares. The reserve shares. So first is the bonus shares, we call it bonus shares. They are issued to existing shareholders when part of the reserves of the company are converted into cash capital. So this is the shares which is issued to the existing investors, and as well this is comes under private company. And this kind of the money, the profit which is earned from the shares would be converted into the cash. And another one is the right shares that give existing shareholders the right to buy new shares in proportion to their existing holding. So this is as well some when the company issue additional shares and which give the rights for the shareholders to buy some additional shares. The proportion as well of these shares would depend on the company, how they fix this proportion. What about the public companies which is issue the shares for the, to the public? They can be bought and sold on the stock exchange, right? You know that, which is recognized stock exchange, which is the mostly used. So we have three kind of financing the linked company, three kind of sources of financing, right? You have so this is first was the shareholders' capital, next one reserves, and the third one is the loan capital. So here is I'm explaining you the limited companies, the nature of limited companies, and directly we are talking about the financial sources of limited companies. We are not going to start about what is limited company, what kind of the forms we have in limited company, what the rules surrounding the limited company. I mean, the whole clear description. This must be done at the study of your, I hope so, let me see, which is management, which is not financial management, which is maybe on the strategy or on the enterprise management, if you have some kind of the classes, I mean, the managers. So when we are going to study about the limited companies, we directly study the accounting of the limited companies. Okay, let's say what kind of financial statements we have on the limited companies. So this is, we have three main financial statements that you know already, which is income statement, profit and loss account. Second one is balance sheet, right? And the third one is cash flow statement, right? We have started the last week. Okay, I'm sorry. I have seen just now. I have seen your messages. So okay, I will give you 5-10 minutes. That's fine. So just let's take a break for 10 minutes. I will pause the recording. Thank you. So right now we are looking at the financial statements of the limited companies, right? So they are same as the three statements we have in the whole when we do prepare for any kind of organization, any kind of type of forms, which is the first one, you know, the income statement or profit and loss account. The second, balance sheet, and the third one is cash flow statement, right? Here is some kind of, we have some differences. For example, in the profit and loss account, which is income statement, of the limited companies, we have 4 measures which is displayed, like operating profit, you know that. net profit before tax, a net profit after tax, and some unappropriated profit, which is earnings, right? So this is as I remember, you have the examples, the samples of the income statements in your previous topics. So this is just to remind you what kind of financial statements we have when we work under or run the limited company. So the profit and loss account, which is the income statement, it also shows the audit fees, as well the transfer to reserves, the corporate taxes for the year, and the dividends paid for the year, right? In the balance sheet, we refer to the current liabilities, which is the creditors amount the fund used in the 12 months, which is the short-term liabilities, long-term liabilities. And as well, we have some short-term liabilities. So additional under the balance sheet of the liabilities and equity, we have a share capital, which would be added to the reserves and shown in the owner's claim, right? This is, under balance sheet, we have taught already this topic. And we have, from the left side of hand, we have another kind of, which is sources of them. Is assets, right? Main resources of the companies, which is assets, which is equal to two types of fixed assets, which is also equipment, and the current assets, right? So here is this information you already have in your previous topics in detail. We're just trying to conclude by the limited company. So let's see what kind of rules surround the limited company. So the first is the directors legally obliged to keep the proper accounting records and to prepare the financial statements, right? That the directors must prepare the financial statements and record it properly under the accounting principle and concepts. The law requires that the financial statements show true and fair view and prescribe much of the form and content of the financial statements. This is a law required for all of types of the companies that the financial statements must present the true and fair view of the company. As well, accounting standards have been, here is just a little notes. This is presentations is being prepared on the UK literature, so you never mind. That is, accounting standards have been developed by the UK accounting profession to define what is meant by true and fair view in the various contexts. So next one, the companies which is listed in the stock exchange are subject to additional rules, which is imposed by the law and accounting standards. So to see the additional rules, you can search your own in the e-books or the internet if you are interested in. Auditors are appointed to provide an independent opinion as to whether the financial show true and fair view. So we have auditors in the business, right? You know that we have some kind of the internal auditors of the can be the staff in the company, and as well the external auditors, which is provide you some independent opinion. They will control and monitor your accounting and to identify the true and fair view of the financial statements. So despite the accounting rules that are in place, there have been rising some of creative accounting. This is so here it says that despite of the accounting rules, which in standards, which we have on the limited companies or another kind of firms, we have some kind of the practice of the creative accounting. But this practice, maybe I will show you on the next classes what kind of creative account could be, which directors runs in the companies. So that's all. You see, this was the topic on the accounting of limited companies, and it was on the financial management, very short and And we are just concluded all what we have taught on the financial statements, right? So right now we are going to move to the homework assignment number 6. Let's see our solutions. You can get your own solutions and to compare with mine. So the students who is going to send me right now or later the homework assignment solutions of the number 6, which is on the depreciation methods, it won't be considered in the evaluation because I'm already going to give you the right solutions, right? This is logically right. So I hope we can complete these solutions by today. And if we would have a free time, additional time at the end, we can continue with the cash flow statement assignment. If not, the cash flow statement would be moved for the next classes. If it's like this, if you want to complete the cash flow statement assignment by today, that means you have at least a few days. By the next week, you can send me your papers and the cash flow statement. So here we have 3 kinds of exercises, which is based on income statement, balance sheet, and depreciation methods, right? Let's see. So the first assignment on the preparation of the income statement or profit and loss account. So here is given to some items in alphabetical order. So you should be prepared the income statement. Use your previous topics and see the table of income statement, how it's prepared, and prepare for me the income statement to show me the net income of this company. Let's see the solution here is solution for exercise number 1. So the income statement is prepared for the 2010 year. So comes with a net income of 4,800. So let's start from the beginning, which starts when we prepare the income statement. We start from the sales or revenue item, right? Here is so the sales equal to 100,000. Then we must reflect our total the cost of goods sold. So here is total cost of goods sold is equal to 65,000, which is include the raw material expenses by the 38,000, the direct labor 14,000, right? The manufacturing overhead by the 6,000, and the manufacturing depreciation 7,000. So this is all the cost of goods sold. So we are taking our cost of goods sold and must deduct from the sale, then we can get and see our gross income. So gross income equal to 35,000. Have you got this amount? I hope so, because I haven't reviewed haven't checked your papers based on this assignment. So and here is I have shown you as well the gross margin. How we do calculation of the gross margin? In the proportion. So here is the gross margin from the income statement is 35% is coming from the sales of 100,000. So the sales comes as 100%, and you have to just make simple calculation to get your gross income and to find your gross margin by the sales. So it's 35% from the 100%, right? Which means 35,000 from the 100,000. So I have some questions. So here is the manufacturing depreciation. This is right. This is expenses comes on the cost of goods sold, the 7,000. So this means here is, let me explain you. The first of all, this when you see the income statement, which have some cost of goods sold, you remember we have the topic that the companies which is making the products, like a production, not a service, or the sell products, just as a trading. They have item which is called the cost of goods sold. So in this item we include the depreciation charges as well. And this depreciation charge, they will reduce the company's net income, right? Because we do prepare this income statement at the end of the year. So to pay the taxes lesser, the most companies, they reflect the depreciation in the income statement, because it reduces the net income of the company, the net income of the company. Okay, here is we have, let's see each of the expenses, because I have some questions. So sales, you know, this is a revenue, right? The sales items means that the companies get the money or from the main of operation of the business, what they do actually. For example, they produce the goods and sell them, so they will get some money, the payment for those goods. So this is sales or revenue, we call it. Next one, we must show our cost of goods sold. And the cost of goods sold, we have some, which is comes the raw material expenses, right? This is the inventories, as you remember, the materials, which is helps to make the goods. Next one, direct labor, which is you know, the salary and wages expenses, which is paid for the staff, right? Manufacturing overhead. This is if it's like this is a manufacturing company which is producing the goods. We assume that it's producing the goods. We don't know which is in the time it didn't say what kind of goods it's producing, but it's manufacturing the goods. So manufacturing overhead, this is some expenses which is made under manufacturing. That would be different kind of expenses. Let's say it's like which is paid for some repayment or something else like this. And the manufacturing depreciation is as well, like, because the company is a manufacturing, it has some equipment, right? Then all the equipment must be depreciated. So we must show that the manufacturing depreciation, or sometimes we just call it accumulated depreciation, we must show and reflect in the income statement. So okay, next one we have. So after we have done all of the cost of goods sold, what that means, the cost of goods sold. This is the cost which is included to make to produce the goods, right? So this is stuff, like what kind of what kind of things are supporting to make goods, like people, right? So that means we pay for people, we pay we pay the salary for the people to make for their let's say for their job, right? What they do. So this is direct labor, which is wages and salaries. Raw materials, right? To produce something, to manufacture, we need the raw materials. That could be wood, iron. It depends on what we do produce. As well, depreciation, right? We charge our equipment. We must accumulate our depreciation. And some manufacturing overhead. This is some kind of other expenses which is made during the manufacturing, during the producing the goods, like for repayments of the equipment maybe, or something else. So this is all comes under the cost of goods sold. Then we have to deduct of our total cost of goods sold from the sales, and we will get the gross income. Gross income, right? Now here is 35,000, right? And how we do find the gross margin? This is just in percentage. That is 35% of the gross margin. This is comes from the gross income, 35,000, which is the portion of the sales from the 100,000. This is just a simple math. Let me show you. So you have to assume that the 100,000 of the sales is equal to 100% of the company's revenue, right? Company's income. Revenue. So next one, this 35,000 is the gross income which we have got from deduction of the cost of goods sold from the sales, right? Gross income. So and it's as well equal to 35%. You just take a proportions. So this is just quite a simple one. Yeah, I have got some of you. Yeah, that's fine. So you do understand what is the gross margin. If I ask you to make calculation, find the gross margin, so you have to find first the gross income and take a proportion from the sales to find the percentage of the gross margin, right? Okay, next one. Then we have to, in the income statement, we have another kind of expenses, which is called the operating expenses, right? So we must show and reflect in our statement. So total operating expenses comes with the amount of 24,000. Let's see what we have under these expenses. It's advertising expenses, 5,000, right? Promotional expenses, 5,000. Research and development, 4,000. You know that what is the research and development that company do on the marketing to find or to produce a new kind of goods or to create a new kind of product. Amortization of goodwill, here is by the 2,000. Other administrative salaries, another kind of salaries which is not from the main staff. Administrative salaries, which is salaries paid for the admin staff. Other administrative expenses by the 4,000. Some consulting expenses, 500. So here is which is administrative salaries, administrative expenses, and the consulting expenses. This is all expenses made for outsourcing. When we outsource some people like auditing, for example, or the consulting. So we pay, because we pay not annually, not monthly, one times in a year, for example, or one times in a half year. This expense comes under operating expenses, okay? And some kind other administrative expenses by the 1,000. So this is all operating expenses. So I have some kind of a question. Let me see first. So, So here is all the total operating expense, which is total at 24,000, right? Any kind of okay, I have some questions. Let me see. What is administrative salaries? As I have explained you, this is like those salaries which we pay for outsourcing. When we invite some people, like maybe some accountants or auditors, and we pay them once a year or once in a half year like a few times could be, or once times in a year. So these expenses, which is the staff, is not the, which is the, this is the people which are not the staff of the company. Those expense comes under administrative expenses. As well, here it gives you consulting, for example, expenses, same, or other kind could be. So, okay, next one. So, after the all, we do calculation, we do find the total of the operating expenses, which is 24,000. We must deduct from our gross income to find our earnings before interest and taxes, right? And which is equal to 11,000. Just take a 35,000 minus 24,000, you'll get 11,000, right? Did you get this amount in your statement, in your papers? Any one of you? So I have the questions which is under the operating expenses. So the consulting expenses, or some administrative salaries, this is expensive, which is we make some payment for those people which helps to make our businesses, or to care our accounting, for example, something else which is not involved in the directly for the manufacturing expenses. Okay, this is like, for example, you would like to invite some auditors, which is independent auditors, review your financial statements to find some mistakes, or so this is you do so. Then when you pay the, like we call it salary, or you just make payment for those services. So this expense you put under the operating expenses, which is made not monthly, in a yearly, which is not the staff of the company, which is direct staff of the company. So this is all we call it administrative expenses or administrative salaries. Here is we have no idea what this company, what kind of this company, that we can say this is manufacturing, that we have seen the manufacturing expenses, right? The next one, we don't know what the company is manufacturing. Just I'm giving you figure and items. You must prepare the income statement. So you might assume that it's manufacturing company and producing, I don't know what is, producing some shoes, let's see. So next one, we do calculation, we do find the operating expenses at the total with 24,000. And to find your earnings before interest and taxes, you must get your operating expense deduct from the gross income, right? It comes with 11,000. And to find your operating margin, this is same things you do as the gross margin. Just must get your the proportion of the earnings before interest taxes to compare with the sales. That will be 11% from the 100 of thousands, which is equal to 100%. That's mathematics. Next one, we have expenses which we call interest expense, right? Is it 3,000? You put 3,000. Okay. Before to move on the interest expense, I have a question. People ask me what means of the margin here. When we are reflecting or showing the gross margin or the operating margin, we want to show what of percentage of profits we get from the revenue or sales. The gross margin is, which means what kind of gross margin, what kinds of gross profit we can get from our sales, right? After that, when we deduct our total operating expense as well, we can find our operating margin, which is as well to show the profit margin from the sales revenues. How many percentage from $1 we can get the profit? How many company earnings from the sales, right? So this is after we do calculation of operating margin, you must put the items which is interest expenses equal to 3,000, and then you find the pre-tax income. The pre-tax income, which comes with 8,000. This is your deduction of the interest expenses from the units before interest and taxes. 3,000, which is 11,000 minus 3,000, we will get the 8,000 of the pre-tax income, right? After that, we do after when we show the interest expense, we must show our income taxes expenses, tax expenses. Here is income tax expenses. In the assignment, it says that tax expenses is a 40%, right, yearly. So to find this 40% of the income taxes, you must get your pre-tax income and multiply on the 40%, just simple, and you will get the 3,200 of the income taxes. And then we show our net income, which would be the last item and last amount showing the profit and loss account. Net income is equal to 4,800. This is difference between 8,000 minus 3,200, which is the pre-tax income minus income taxes. Then you will get net income, right? So net income, this is the amount which comes after making all the expenses, which is cost of goods sold and operating expenses, and as well, which is interest expenses and the taxes expenses, right? So net income equal to 4,800. And if you would like to see your net margin, which means how many of profit you earn from the sales, as well, you can get the percentage of it. Because this is about the net margin, or gross margin, I haven't given you the formulas. This formula comes under the next chapter. So you never mind if you didn't answer it right now, because I want to show you how the income statement, with which kind of items it comes in a whole picture. And here is if company wants to see and show how many percentage of the profit they have got from the sales, they show their net margin. For example, for example, right here, net margin is as well for 0.8% from the sales. Okay, as well we have done the calculation like gross margin or operating margin. Okay, I have some kind of questions. Let me see first. Okay, most of you are asking for me the formula of the gross margin, operating expenses, net margin. Okay, let me show you the formula for the operating margin, which is 11%. So here is 11,000 multiply on the 100% and divide on the sales, which is 100,000. Okay, and you will get 11% of the operating margin. Operating margin, just here it is. So 11,000, this is the earnings before interest and tax, right? You multiply on the 100% and divide on the 100,000, which is the sales. Then you will get 11% of the operating margin. Okay, how some of you asking me how we did get the 11,000. 11,000 of the earnings before interest and taxes. We have taken the gross margin, gross income, sorry, the gross income, which is equal to the 35,000, and minus your operating expenses. Yes, operating expenses, and which is equal to 24,000. Then you will get 11,000 of your earnings before interest and taxes. Here is. You see, first of all, when we do prepare the income statement, we put on the bottom the item which is sales or revenue cost. After, we must deduct all our expenses from this sales. And the expenses are different kind of. First is the total cost of goods sold. Next, operating expenses. After that comes interest expenses. And last one is the income taxes, right? So we have to take all our expenses and deduct from the sales. But it's very important when you do prepare the income statement, it must show you which says, let's see, which kind of expenses comes firstly. Like here is, and the different kind of statements of the companies. You must show that after the sales always come the costs of the goods sold. Then we must show our operating expenses. After that comes interest expenses. After interest expenses, you must deduct your income taxes. And then at the end, the item which comes on the income statement is a net income. This is the main part which we show how much profit we have earned from our operations, from our business. The net income. Net income, right? If you would like to know and show what kind of profits you have got from your sales in the percentage of firm, you show your net margin, which calls margin. The gross margin or net margin, you can show both of them. And as well operating margin if you like. So this is all. That's all for income statement. Any questions so far? So I wanna say you that this income statement, this form, is mostly that you would find in you will meet on the different companies or organizations. Like here is given you the main items which you would be reflected in like manufacturing or production company. Maybe later I give you some kind of income statement which is on the service company. I think I have given you already before we have seen it. So, okay, some of you ask me, what about the income taxes, which is equal to 40%, right? This one, how we did get? You must take your pre-tax income amount, which is equal to 8,000. And multiply onto 40%, right? Which is, and it will be equal to 3,200 of the income taxes. That's the income you pay, the taxes, the charge you pay for the tax department. Like here is. Okay, some of you asking me if the students could be mistake or mix the cost of goods sold with the operating expenses. It will be wrong. This is like we have some rules, right, and some standards on the accounting how we should prepare the income statements or another financial statements. So for me, it's better if you do by the step by step how I did show you. You must separate your cost of goods sold and show them firstly. Then you must show your operating expenses. If you do wrong or mix of those expenses, this will be like a mistake. But the total is very important. What kind of figure you have got from the net income. But first of all, we have to follow the accounting rules and standards, how to prepare the financial statement. It's very important. So you must know what kind of expenses comes on the cost of goods sold and what kind of expense comes on the operating expenses, right? But this is simple. With the practice, you do learn it fast and you can remember it. Like cost of goods sold is an expense which is directly made by the manufacturing staff, by the manufacturing equipment with the main business operation. Then operating expenses, this is all the expense which is supporting the manufacturing, like advertising expenses, like research and development, some consulting expenses, which is outsourcing like this, okay? And after that, you must show me your earnings before interest and taxes, which means profits before interest and taxes. After that, you show interest expenses, which is paid, and after interest expense, income taxes. So the tax charges comes at the end of the all expenses, okay? Because we pay our taxes at the end of the year, and at that moment when we do deduction of all our operating or manufacturing expenses which is made by the company. So the income tax would be at the end of the taxes. Okay, that's all for the income statement, right? So now we are going to move for the next assignment, which comes on the balance sheet preparation. So here is given to you some as well items in the alphabetical order. You should prepare the balance sheet, and you have some kind of additional questions. Let's see. So the table comes with under the two slides, right? Here is we have some continuous of the slides. Here is. So let me show you solution. Okay, let me see the solution. Let's see the solution. Sorry, for the exercise number 2 and the balance sheet. So have you got this amount and the total assets which is balance? We have 100,000, and the total liabilities and equity 100,000 as well. Because we are already have some practice on the balance sheet, I think this must be not so difficult for you. Okay, current assets, you know, we have a cash, marketable securities, accounts receivable, inventory, current deferred tax assets, other current assets. This is all assets which can be quickly converted into the cash, right? Then we show our fixed assets, which is land, building, equipment, office equipment. Under the balance sheet, we must show our accumulated depreciation. What that means accumulated? This is accumulated the total depreciation of all the equipment and fixed assets that the company have. Yeah, and this amount is a yearly depreciation charges of the year. And at the end, we show some goodwill, which is like a brand, the company's brands, which is the patents, which is another asset, which is not material, and another kind as a long-term assets. So we do, we show, reflect all these items in this kind of preparation I have just that I showed you. So total assets would be equal to 100,000, right? Another part of our, which we have financial sources of our assets, we show our current liabilities, which is accounts payable, accrued liabilities, wages payable, taxes payable, current portion of long-term debts, which is all total current liabilities equal to 31,500, right? They must be paid within the 12 months, right? And then we show our long-term liability, which is long-term debts, the pension liability, some deferred taxes, and other long-term liabilities, which is equal with the current liabilities, a total 74,500. And we have as well shareholders' equity, which is equal to 25,500. Total amount of the liabilities in equity would be equal to 100,000, which is equal as well to our assets. So we have a balance between the total assets and the liabilities in equity, right? So that's all. So I hope you have got these amounts. Any questions so far? The balance sheet. I think these all items is already familiar for you. If not, like accumulated depreciation, I will explain you later what that means. Okay, I already explained you in the short terms. Okay, some of you asking me what is the goodwill. Goodwill, this is like patent, you know. The companies, when they are producing something new, something which is different from the rest of companies, they buy patent for this kind of goods. Patent, which is like a license, let's see, patent or license for the special of goods or services. So, and as well, when we buy it, okay, we have to pay for this license or patents. We make some cost, right? And this is our assets. We must show in the balance sheet, like a goodwill. We say goodwill. So, I have some another questions on the current deferred taxes. Let me see where is it. Okay, we have some deferred taxes. So this is the taxes which must be paid in the future. We haven't paid because the long-term liabilities. This is all liabilities which we must make a payments in the duration of the more than 12 months, right? So some taxes would be paid by the portion. It's called the first tax.
Please wait. You are on hold.
Firms.
Yurjan Intidar, please wait.
This is all tax that we haven't paid yet and going to pay in the next year. Like sometimes the companies maybe won't pay the taxes or the portion of the taxes. Like they have not enough money, or there could be different situation. And the tax which you must be paid at the last year, they pay on the next year. They defer it, like pay later. Let's say pay later of the taxes. Okay, that's all. So any questions so far? Or what else? Inventory. So inventory always comes under current assets because this is the stock which could be converted more faster into the case than for example, land or building. You remember what is inventory? Like raw materials or some the goods which is being living in the stocks, which would be which is living the stock for the future sales. So we can sell this the assets faster than the like buildings or land, which is a very huge and expensive assets. And inventory always comes under current assets after the the cash, the money in the banks or accounts receivable, which is we must receive the payments from our customers or partners. So you have to show inventory under current assets. Because in the next class we have a ratio analysis of the financial statements. In that part, you will learn all these items. You will use these items in the formulas to make analysis of the financial statement. So why this? We do prepare the balance sheet income statement, and we have to know all the items in which right places they are being reflected, because we do some kind of analysis, and we must know and remember all of these items. So that's all. Any questions so far about the balance sheet preparation? And sometimes the student, they put these items in the wrong place. I mean, like maybe confuse the current liabilities with the long-term liabilities. Or the most important thing is that you get the balance between the liabilities and assets. But next step is would be small, but it comes with the mistakes if you put the items in the wrong place. Because very important, as I told you, like in the income statement, all the items must be reflected by the accounting rules and standards that I have shown you in the examples or in the assignments. Okay, let's move for the next one. So we have some additional question for the balance sheet. The A, what dollar amount are the four items? You must fill up these tables to show me the total of the current assets, the gross plant property equipment, which is the fixed assets, then total assets, current liabilities, total liabilities, and the last one to show me the total liabilities and equity, just amounts to get from the balance sheet table, right? And the question B was about what items were not included on the balance sheet. So you have some items in the sign which is not included in the balance sheet, which is just showing you as wrong, but it's specially made for you that you must defer the items of the balance sheet with the items of the another kind of statements, like let's say profit and loss or the cash flow statement. Okay, let's see the solutions. So the solution for the assignment A here is comes. So current assets is equal to 58,700. This is by the balance sheet, right? The gross plant property is 70,500, which is total assets with 100,000, right? You remember we have a balance at 100,000. Current liabilities equal to 31,500. Total liabilities equal to 74,500. And the total liabilities in equity, the company's financial sources, equal to 100,000. So this is what we should do on the assignment A. So this is all the same amounts as I have in my balance sheet solution. You must just, if you can open your computers, you can review and compare it. Okay, next one. So the assignment B on the balance sheet, asking you to find the items which is not included in the balance sheet, the wrong items, let's say, and you must explain why they are not included. The answer, first of all, this is there were item like net income, right? As you know, the net income is the bottom line of the income statement, the part item of the income statement. and it must be reflected in the income statement. We won't show in the balance sheet. But it's indirectly captured in the shareholders' equity. So this is the reason, the answer for you why this item is not included in the balance sheet net income, because it's already captured in the shareholders' equity, right? So net income is the item of the income statement. So you must defer the items which we include and reflect in the balance sheet, and the items which we reflect in the will show in the income statement. They are deferred. Next one, depreciation expense you have. So depreciation is an annual expenses and is directly captured on the balance sheet as an increase in the accumulated depreciation. So you remember you have this item accumulated depreciation on the my balance sheet solution. As well, you have another additional item which comes like depreciation expenses. This expense is already inside of the accumulated depreciation. It's a part of the accumulated depreciation. And we shouldn't show these depreciation expenses in our balance sheet, because if we do so, we show our expenses 2 times. The same expenses 2 times. That would be wrong. Okay? So now you do understand. Any questions so far based on this item which is not included in the balance sheet? Net income, right? You know this is the main item in the bottom line of the income statement. We won't show in the balance sheet. And another one, depreciation expenses, which is the part of already the part of the accumulated depreciation. This depreciation expenses amount is already inside of the accumulated depreciation, and we won't show in the balance sheet do not show it in the double times. Like that's what I want to say. Okay, let me show you the previous slide. Some of you asking me. But you already have these assignments in your mailboxes. You can open, and if you want to go back, you can see them and review what you want to. So this is what solutions for exercise number 2. Next one we have the exercise number 3 under depreciation method. There we have 2 kind of assignments, right? So let's move. Are you okay? Are you clear with balance sheet? Okay. Some of you asking me about the balance. Let's make a calculation. So, first of all, let's see the right side of the balance sheet. We have a total current liabilities, which is 31,500, right? Then we have a total liabilities, 74,500. This is total liabilities. Is already including the current assets and the long-term assets. So you must get this amount. Let me show you. To take 31,500 plus long-term debt, which is 5,000, plus your 23,000 of the pension liabilities, deferred taxes as well to 13,000. Let me show you, and plus 2,000 of the as long-term liabilities. Then you will get 74,500. Here is. It didn't show you the total amount of the long-term liabilities, because this is total liabilities. Here is. It's already include the current liabilities and this amount, which is long-term liabilities. And then you must add the shareholders' equity to the total liabilities, which is 74,500 plus 25,500. You will get 100,000, right? Okay, this is, I have shown you the right side of the balance sheet, the liabilities and equity. Let's see the assets, which is the left side of the balance sheet. So, okay. So, to get the total assets, you must get your total current assets amount, which is 58,700, right? And then you have some total gross amount, and this 58,700 plus 36,000 and plus 4,300 and plus 1,000. This all amount gives you 100,000. So you will get the this amount. Let me type for you. That would be good. And we'll explain you why. Just a moment. Give me time. Okay. So why we should get the we shouldn't get the let me show it. We shouldn't take this amount, which is the total gross which is PPE, which PPE, which property, plant and equipment, which is 70,500. We must deduct our depreciation cost, right? After deduction of depreciation cost, we will get then 36,000, which is the total net fixed assets after deduction of depreciation. It's very important to deduct the depreciation. Okay. Okay, it's like this. Because depreciation comes with a negative figure, we must deduct from our gross fixed assets. Okay, so let me see, or the next slide maybe. Let's check what is happening on the next slide. So let me share with you same file. It would be easier. Let me just a moment. So which is the one? Okay, here is. So first of the current assets is 58,700, right? This is, we have it. Where is it? The current assets, this one amount already. 58,700, right? Next one asking put the gross plant property and equipment amount, which is 70,500. Let's see. As it says, just put the gross plant property amount, which is not net. We must put the gross amount, okay? Which is without deduction of depreciation charges. And it's equal to 70,500. As well, here is this amount, 70,500. Next one, total assets, 100,000. You know total assets is 100,000, right? But you want, let's say, accumulate these amounts because this amount comes without the depreciation charges. You just must show total assets. Okay, it's 100,000. Next, current liabilities 31,500. Yes, we got this amount here, 31,500. After that, total liabilities is 74,500. Let's see. Which means total liabilities, do you remember what that means? Is equal to current liabilities plus long-term liabilities, right? Two kinds of liabilities. And here is total liabilities equal to 74,500. Is it? Yeah, same amount, right? And the last one, we must show total liabilities and plus equity is 100,000, right? So these all amounts are correct. So that's all. Any questions so far based on this balance sheet? You might be mistaken because in the gross plant property equipment, which is the fixed assets, we didn't charge the depreciation. Because if say just a gross plant property and equipment, you must show the gross amount. If says net gross plant, show the next net fixed assets after depreciation charges, then you show another the amount. So, and let me show you the current liability. Here is we want add this current liability, which is item number 1, with the item number 2 to see the total liabilities. You see the assignment says you must show what dollar amounts are the following items. You just must put the figures from the balance sheet to choose which is one. Here is might be different kind of items. It doesn't mean that the total assets here is which is 100,000, which is taken from the balance sheet. It doesn't mean that it shows accumulation of these two items, which is the current assets and gross plant and property, which is 1 and 2. Yeah, I think I do understand what you are confused with the which kind of amount. Because you trying to accumulate the current assets 58,700 with the gross plan 70,500. Of course, you won't get the total assets, which would be equal 100,000. The amount would be more than it. But we show all the amounts which we should get from the balance sheet. Okay. Okay, thank you. We do understand. Okay, let's move for the next assignment. Okay, assignment B, you remember? Well, already we have reviewed. So what kind of item is not included in the balance sheet is the net income and depreciation expense, right? Because net income is a part item of the income statement, and depreciation expense is already the expenses which has been included in the accumulated depreciation. This is a part of the accumulated depreciation expenses. So we won't show it as a separate in the balance sheet because we want to double it as expenses. So the next one we have some exercise number 3 and the depreciation methods. So shall we start this assignment? So assignment says the Cascade company has a quarterly accounting period, which means they quarterly make depreciation charges and pay all their taxes and to pay the financial statements, right? On the 22nd of March 2002, the Cascade acquired a computer for 12,000, which is the original cost of the computer is 12,000 USD. And management estimates that they use this computer for 3 years. And at the end of 3 years, at the end of the useful life, the computer will have no resale value. That means all depreciation charges would be let's say expanded by the useful life of this computer, which is 3 years. After 3 years, computer will have no any kind of value. Okay, this is resale value. So the assignment A says, using the straight line depreciation, the compute depreciation expenses for the quarters ended 21st of March, 2002, 30th of June, and the 6th of September. And next assignment, which is B, says, asking why does Kafka company to record this depreciation on this computer? Why the company actually needs to depreciate the fixed assets? You know that we have done it. Because all the fixed assets must be depreciated, the charge must be reserved, as we do use those fixed assets in our businesses. And we must make reservation, some reserves for our fixed assets, just to buy a new ones after usage of the assets. I mean, when the useful life would be expired, we can use depreciation charge to buy a new equipment. So let's see the solution for the A. Okay, first of all, we have to remember the company is preparing and charging the depreciation quarterly, right? In the year we have 4 quarters, right? But one quarter includes 3 months, right? Firstly, we must understand and to find the amount, how much depreciation we pay for 1 quarter. First of all, we do calculation to find depreciation charges for the year, for 1 year. So we must take 12,000, which is original cost of the computer, and divide for the 3, which is the 3 years of the useful life of this computer. You will get 4,000, which is the depreciation charges in 1 year, right? Next one, to find how much we depreciate, how much the depreciation expenses for the quarter. So we have to take 4,000 and divide on the 4, because we have 4 quarters in a year, right? Is equal to 1,000. We have a depreciation expense in 1 quarter. Then, if you like to find how much depreciation you have in the 1 month, just take your 1,000 of depreciation in a quarter and divide on the 3, which is 3 months, because 1 quarter has 3 months, right? And you will get depreciation in 1 month, which is equal to 333. And here comes interesting part. I want to show you the computer, which is cost 12,000. We have bought in the 22nd of March, right? And we must show the depreciation cost for the 31st of March. How we do show it? We must to find how many days we have left from 22nd of March to 31st of March. So here is how many days we have. You just get a difference. It's 10 days, right? And we have find the depreciation expenses for the 10 days of the computer of the original cost from 12,000. 10 days only, right? So sorry. So to find it, we must, let's see, we have to find first how much depreciation expenses we have in 1 day. At the 1 day, only 1 day. So you have to take your depreciation in a month, 333, and divide to 31 days, because in the March we have 31 days, right? And you will get depreciation, which is a 10.75 in the 1 day. This depreciation cost in the 1 day, which is in the March only, March, because in the March we have 31 days. And then here is, as we know that we have 10 days, which would be end by the quarters. We must find the depreciation cost for the 10 days only. Just take your depreciation expense in the 1 day is 10.75 and multiply on the 10 days. And here is depreciation cost, which is 107.5 is the expenses for the first quarter. But it's not a whole first quarter, you remember, it's only 10 days. Here is, I have put that at the 21st of March, I have depreciation cost 107.5 only for the first quarter, right? And next one, I must make a calculation to find for the second quarter, which is end on the 30th of June. It's the 1 month. At the 1 month, you remember, we have done some calculation. Here is 1,000. Oh my, sorry. It's a 1,000, right? It's a 1,000. So I put here, I already got the amount. So 1,000 minus 1,000. Then I have to find the depreciation cost for the third quarter ending 30th of September. So it's as well equal to 1,000, because this is a 1,000 depreciation cost for the 1 quarter. So after that, the assignment says that you must compute your depreciation cost for the 3 quarters. Compute, that means to find the total amount of the depreciation cost from the 3 quarters. So here is, I have just type for you and show you the depreciation expenses for the first 3 quarters equal to 1,107.5 US dollars, right? Because the first of the depreciation cost 107 plus the cost the second quarter 1,000 and the plus the depreciation cost of the 1,000 of the third quarter. So here is just formal to show you how I got this amount. So this is okay. That's all. So we have solved this assignment and the depreciation methods. So first of all, if you have some kind of same assignment which says the company pay quarterly or 2 times yearly, prepare the income statement, which is, let's say, the financial statements at overall, and the depreciation they charge quarterly or yearly. You must remember and how to make calculation to find for each of them. And it's very important that when the assignment show you at which day the fixed assets being acquired, like here 22nd, right? If we do at let's say if the company has acquired the computer at the 1st of January, then your depreciation cost for the first quarter will be 1,000 as the second and the third one. The same amounts would be. So this is all. Okay. Okay, some of you says me that this depreciation for the second quarter will be a little bit lesser than 1,000. I have just rounded it by taking the depreciation for 1 quarter. Of course, we can do calculation to take the amount for the each day and make calculation for the 1 quarter. And make calculation how many days we have in a specific quarter, in the 2nd quarter and the 3rd quarter. But for me, in the depreciation method, here is the most important, the way you do calculation. I mean, it's okay if you put the nearest pounds of the amounts, like, but you just have to show me the way you do calculation, that you find the exact the depreciation charges based on. Yes, the total amount could be lesser because of if you do depreciation cost and do calculation, but the daily of the expenses. If I have done like me, like a quarterly, just put the depreciation for 1 quarter, 1,000, I just approximately around my depreciation charges. That would be 2,107. So anyway, I will accept 2 kind of let's say results, which would be if you do calculation by quarter like me, or for the 2nd and the 3rd quarter, or if you do calculation daily. Here is. It's no mistakes if you do both of them. So, any questions so far based on this assignment? So if you do, for me, like when you do calculations, when you're trying to solve the assignments, for me the best important things that you show the right, the way of your calculation, the formulas or way how you did find the figures. If your figures like the calculation would be wrong for $1 or $2, let's say, or some nearest pound, I won't care about it, because the main point is that how you did find this your results, what you have, what kind of formula you have choose, you used, let's say, and the way of your calculations. But of course, the result must be nearest to the right solutions. Because after that, we do some ratio analysis, which is we do the analysis of financial statement. We do a lot of calculation with the amounts, and the reason we have some things that sometimes the nearest pound would be differ from my solution with yours, and on those assignments, I exactly see the way of your calculation only. If it's if it's you near it the pounds, it's okay. Or sometimes I can put the amounts to, let's say, just a moment, I want to say you something. I mean to round the amounts, okay? To round, if you do around the amounts, it's okay. If I do round amounts, if you didn't, that's as well fine. Okay, thanks. So let's see the next one. We have assignment for the depreciation methods. We have exercise number 3, the second assignment, right? You remember? So are you ready for this assignment? Or, yeah. Okay, thank you. I was thinking that if you are tired, we can leave it for the next class. If no, we can finish right now. Let's finish it, because we are already making this assignment for 2 weeks, right? Or 3 weeks, I don't remember already. So the assignment says that the Richards enterprise maintain its fixed assets at the cost. So they show the original cost and depreciation, the separate entities in the balance sheet, right? A depreciation provision account is in use for each type of assets. So that means this company, they use different the depreciation methods for the different assets. For example, for motor vehicles, is to depreciate at a rate of 12.5% by the reducing balance method. So for the motor vehicle, they use reducing balance method. But office equipment is depreciated using the straight line method. You see, the straight line method for the office equipment. So they use the different methods for the different assets. In the year of the sale, of depreciation is to calculate according to the number of months owned. Accounts are prepared annually on the 31st December each year. So they prepare the financial statement at the end of each year, at the 21st of December. So as well, the following transactions actually have been taken. Let's see. On the 1997 of the 3rd January, they purchased new motor vehicle by check at the cost of 21,000. So they buy motor vehicle. And this motor vehicle, you remember, it must be depreciated at the reducing balance method, right? Here is. And as well, we already know the rate is a 12.5%. Next one, at the 1997, 8th of March, the company purchased new office equipment, which costing 12,500, paid by check here. So the office equipment, the company depreciate by the straight line method, right? Okay. And at the 20,000, at the 30th of September, the company sold the motor vehicle for 10,500, which is received by cash. So they buy in 1997 and sell in 2000 after 3 years approximately. So here is the assignment. Says you must calculate the depreciation charges for the motor vehicle and the office equipment for each year from the 1997 to 2000. It's like 4 years, right? 97, 98, 99, and 2000. We must find depreciation charges for the 4 years for the 2 types of the assets, which is motor vehicle and equipment, right? The business plans to use the office equipment for 8 years. So, office equipment, which is cost 12,500, must be depreciated by the straight line, right? And the useful life of this equipment is 8 years. And it is estimated that at the end of the time it will have salvage value or residual value, you remember, which is equal to 500. So here it says all depreciation charges should be round to the nearest pound. As I said, we will round it amounts, it won't be wrong. So let's see solutions. So first of all, this assignment seems like a big one, a lot of words for you and some information. But we know that we have 2 kinds of assets, which is motor vehicle equipment. They must be depreciated by the different methods, right? Let's see the solution. First of all, motor vehicle. You remember motor vehicle being purchased by the price of 21,000. At the motor vehicle, we use reducing balance method, right? Based on the assignment, and the rate of depreciation rate is 12.5%, right? And as well, in the assignment says that in the 2000, on the September, the company has sold this motor vehicle at the 12,500, right? That means we must at the year of the 2000, if we sell our assets by in the September, that means we use these assets only 9 months. From January to September is 9 months, right? So calculation here. The first year of the depreciation cost is equal to 2,625. So this amount has been taken. So 21,000 you must multiply on the 12.5%. You will get the depreciation expenses. After you have to get your net operating net costing prices, or sorry, let's say net historical cost of these motor vehicles, which is equal to 18,375. You remember, as this is a reducing balance method, we must take our historical cost and minus our depreciation cost. And after that, from the net balance, we must make a calculation to find our depreciation cost for the next year, for the 1998 series. And depreciation cost is equal to 2,297, right? So then you do for the each year to find your depreciation cost. You must remember that as a reducing balance method, you must to find the depreciation cost for the next year, you must find your net balance value of the motor vehicles. And at the last year, which is 2000, we have used the equivalent 9 months only. So we must find depreciation for 9 months only is equal to 1,390. So at the end of the 4 years of use of motor vehicles, we have some salvage value, which is equal to 12,749. And then the company goes to sell these motor vehicles for 12,500, right? So approximately we have nearly this amount which is going to sell. So it would be left some balance around for 250. But this is we have been made the depreciation charges for the 4 years, and the 4th year is by the 9 months only. And here I just shown you around it. I didn't make calculation for the daily, as we have seen that this motor vehicle is both 3rd of January, 8th of March, different days, right? As well, here is must be you have to like make calculation and consider how many days in a yearly the company have. But this is if you do so, like me, I have just rounded. It should be correct as well. Because for me, most important that when you use your reducing balance, you use right fixed rate first. You do right calculation. The way of calculation here is like this. So next one is the office equipment. Let's move to the office equipment. Is it okay? So office equipment is being depreciated by the straight line, right? And have salvage value which is equal to 500. First, depreciation to be calculated over 8 years. So we are using office equipment for the 8 years. So to find the depreciation for the year, we must take our original cost, 12,500, deducted our salvage value. You remember it has a salvage value of 500, and divide on the 8 years of the useful life of this equipment. Then we get 1,500 pounds, right? And we do show our depreciation charges for the first 4 years, 97, 98, 99, and 2000. So at 97, depreciation cost at the each year is the same, 1,500, right? At the end of the 2000, we have some balance of this office equipment, which is equal for 6,500. So the first is important that you office equipment, you use the straight line firstly. You consider your residual value, and you remember your useful life of the office equipment, which is the 8 years. First, you must find the depreciation cost for the year, right? Then calculation would be easy to find for the next 4 years. Your depreciation charges and as well the balance of this equipment. So that's all for the office equipment. The office equipment is very, when we use straight line, it's a simple method of depreciation methods. Oh, okay, sorry. I thought that the motor vehicle is sold for 12,500. It's a 10,500. It's never mind that. Anyway, we have this amount at the end of the at September of the 2000. Let's see. After we sell this, let's see, when we sell this fixed assets by 10,500, and we will some kind of 2,200 amount will be left, right? And this amount comes in the reserves. You remember that we have some reserves which is include some profit from the sales of fixed assets, and that amount would be reflected under reserves, and it would be reflected as the profit, the company's profit from the fixed assets. Okay, so that's all. Yes, it's capital reserves, what I want to say. So that's all. So any questions so far for the by this assignment? So you do understand, right? So do not afraid that if you would round it your amounts, that's okay. The best you show the right way, that you know which method you use for the each kind of asset and by the wish of the fixed rates. And you do consider your salvage value. This is very important. That's all. So thanks a lot for your consideration of the assignment. That so, and I want to ask you to have some additional class for the next week, which is beside of the Friday. I just have a question. Do you have any free day at the working days, within the working days? Free, I mean free or from the classes. So because we must complete our class in May and do exam in May, so but we have a lot of practice to do, and our deadline would be extended. I want it extended. Just let me know if you have any free day from the classes on Monday, Tuesday, Wednesday, or Thursday. If you don't have that, that means we cannot change. We cannot use other days. Then we should to extend our classes. Because I have the trip, which is let's say my holiday trip in June, I was trying to finish before it. If you want to finish, then we take some breaks for 2 weeks, then we continue our classes. Let's see how we could finish it. Okay. So some of you asking me to have 4 hours of classes in Friday, but I have to tell you it will be very difficult for you to have, because we have new topics you won't be, I want you confused in those topics, and a lot of information would be difficult to get rid. So it's like no solution, I think so. Okay, you try. You can discuss yourself when you can do the classes. I will as well discuss with the admin about your free days if you have so. Because if your semester would be finished in the May, but it cannot be in May because we have still classes in May. In the middle of May we have exams, so it cannot be finished at the beginning of May because of Norris holidays. Is all classes being extended? So I don't think so. Okay, we'll see. We'll see. I will discuss with the admin, then we'll let you know. And we'll let you know. We'll ask you at which day is convenient for you to have an additional class. Okay? So thanks a lot. Thanks for your consideration. So just email me if any questions. I already have sent you this assignments. Today's presentation always have in your mailboxes. Thank you. Bye. Have a good time. Have a good holidays.